see the deck in front of us. So this is the fund update call. It is September 25th, 2024. And we thank you for joining us. So it's going to be myself, Matthew Todman, and David Jarvis, who is also on the line here today. Omar is sending his regrets. He's actually busy meeting some prospective advisors and talking on the topic of this very fund. So he does send his regrets. I'm sure he'll be back next session. So thank you for joining us. So this is a fund update call. We're going to get right ahead into this, guys. And a theme here, we do like to have a theme each session here. And today's theme is a little bit on the, it's a little negatively connotated. It's about the recent lawsuit against Alphabet or Google. We're going to talk a little bit about that, and then we're going to talk about some of the outstanding positions, and then we're going to talk about what we are looking out for in the next little while, next few weeks, next few months, and maybe even a slight discussion about what we believe the rest of the year looks like. Although nobody here has a crystal ball, nor does anyone else. Okay, so let's continue on, guys. Here, so there has been now why do we care about Apple? Well, quite frankly, we have a position in Apple, in Alphabet, and we do want to take it into account these things. Now, one thing is that lawsuits like this, which was headed up by the Department of Justice, these are not like one and dones, right? And this started way back in 2020, and they found out that one second, Google has really a big market on all the on all the searches going on in the United States, and from there it can derive a heck of a lot of revenue. I mean, that being said, Microsoft has kindly hijacked my my search engine, because it kind of at some point it actually deleted all my pre-prompted logon credentials and passwords and only made them available in Bing or Edge, which was interesting. So I don't use Google anymore, but that's simply kind of what happened. I'm not too sure if that's self-inflicted or not. But nonetheless, the argument is there then, and it's pretty definitive. We have turned Google into a verb. Did you Google it? Right. So obviously there's a lot of pervasive features about that. It's very wide reaching, right? So years litigation. On August 5th, judge ruled that Alphabet may have violated the antitrust laws with regards to its search business. Judge noted that it may have paid around 26.3 billion 21, so that its search engine is default on smartphones and browsers. So interesting how that works out, right? Did you really pay for being a monopoly, or did you pay for service, right? Argue that as a result, the search monopoly, Alphabet could have charged advertisers higher prices. The verdict read, Google is a monopolist, and it has acted as one to maintain its monopoly. Not the most endearing phrase to be quoted, but yeah. So let's just see what happens with this. I mean, you don't know if this is going to be appealed and how long this will go on for. I do recall when Microsoft had its antitrust lawsuit. David, I'm not sure, but I think that went on for like 7 years or 10 years, didn't it?
These are not short legal suits.
Not short. Yes.
It's multi-year. These are complex issues. Just understanding and pulling the materials together takes armies of people to put it together. And then it has to be sorted, presented, reviewed, analyzed. As somebody who's familiar with just normal civil cases, somebody's complaining about a broker, that typically 2, 3, 4 years. So this is an extraordinarily large case. So realistically, I could easily see 5 to 10 years, unless Google decides to cut to the chase and negotiate some sort of transaction. But that's not in the company's best interest, I suspect. So this is going to be around for a long time.
Yeah, and the I guess the question here is, what as an investor, what do you do with this type of information, knowing that um, it doesn't get settled in such a long time, right? And what is the potential hit to the bottom line if you do have, basically an imposed penalty placed on it by the Department of Justice? Like, how how is this considered when managing a portfolio, right? And the answer is not an easy one, right? It's certainly not an easy one. So we are proceeding on the basis of, listen, we like the business model. We don't know what's happening here. This is another, to use kind of like first principles, this is another point of uncertainty, right? You don't know what's going to go on here, right? In this slide here, we're talking about a second possible trial to determine how to address this issue, right? Um, this very Danielle put together this deck, and could play into 2025. I would say maybe even 26, 27, or 28. Who knows? Um, but we will see what happens. But it is very difficult to kind of say, okay, well, what's how to really trade around this, how to invest around this, because this is one of, quote unquote, the Magnificent Seven. They are into the cloud space. They are into the AI space. So the future looks uncertain and bright, but at the same token, the future looks uncertain and a little bit of gray cloud here with this lawsuit, right? So it really depends on where you believe the check marks and the minuses are tallying up to figure out how to trade around this or invest around this, right? I mean, I'm using those two different words very purposefully, right? Because trading to me implies a much shorter time frame than investing, right? To me, investing implies a longer time frame. And certainly in this fund, there's a route of trading, which is options, and then there's a route of investing, which are long positions. Okay. And there are two definitive kind of streams of transactions, right, guys? So we are looking at this as an investment, because we do hold long shares of Google. And we'll continue to do so. We'll monitor the situation until something comes out, but right now we are monitoring the situation and doing our best around it. Okay. All right. Impact of financials. It's the biggest contributor overall revenue, which is the search business. It was more than 50% of overall revenue, which means it is material. Absolutely, right? In accounting terms, anything over 5% textbook wise is considered material. So 50% is obviously material. Reportedly, Alphabet search engine processes around 8.5 billion search queries per day. That's a lot of search queries. That means each person on the planet is doing at least one query. So, and that assumes every person on the planet has access to the internet, which they don't. So, yeah, it's a driver of revenue, top line. It's a driver of profitability, bottom line. It is going to have an impact, and if it's divested, what happens? And are both of these, if it is divested, are both of these entities going to be profitable? These are all additional points of uncertainty that result from the major point of uncertainty is that will this be a successful lawsuit, and adversely affect Google? Okay. Let's continue on here. So it could, as this is very nice wording, could remain a headwind. Can't do much about it. It is valued over $2 trillion. But again, recently Alphabet won a few court cases, including a digital ads antitrust case in the EU. However, the timeline of the ruling pushes it to be after the US presidential elections. Like, nothing is going to be decided here before the presidential elections. And in a nutshell, this will continue to be a point of uncertainty that needs to be monitored, period over period. David, any other final words as we kind of move on from this kind of Google study?
No, and these, it's one of the great ironies of competition. We have this belief that if somebody has a monopolistic or is in a monopolistic position, that monopolistic power is exercised, and it's adversely prejudicial to holders. But the real interesting irony is, um, if somebody is that much more efficient than everyone and provides a better service than everyone else, is it a surprise that everyone ends up using it? And the answer is no. And so we get this weird situation going where their very success, their very dominance and ability to outperform everyone else means that everyone will use them. Is that necessarily a monopolistic position? And is the company necessarily exploiting it? So there are extraordinary broad principles under law that need to be addressed. And it's extraordinarily complex. I even though we say this isn't going to get resolved by 2025, I just don't see this being resolved in the next 5 years. So this is just something that we accept. And in many ways, um, one could argue that um, any successful company that's too successful could be challenged. So this is just a risk of investing. And of course, it's also politically motivated. Um, Attacking something like this allows politicians to grandstand, and that may sound kind of self-serving and contrary to exactly what the role of a politician is supposed to be. But also, you got to look at it from a country by country, region by region analysis, because politicians have a duty of care to promote their country, their region. So, um, would a breakup necessarily enhance some of the local countries or create opportunities for other companies in other countries to participate? So this has just got massive politics written all over it as well. And I can assure you it comes down to extraordinarily close readings of the legislation, and it will be affected because this is not inconsequential to the company, but it's also not inconsequential to um, to everyone, and therefore everyone is going to get involved. This is just an extraordinarily messy, complex issue that is going to be with us. Um, and that's what we have to accept. And I think you just, yes, uncertainty. What you do is you increase your discount rate, so to speak, and you take a look at a firm such as Alphabet. You estimate what their total revenues will be, and because of the increased risk, you increase the discount, which means that you'll come up with a lower present value. And yeah, and it just stays like that. Um, as somebody who's run a merger arb fund once before, every deal gets examined, and the various governments get involved. I cannot tell you how many have been challenged. Sometimes we have no surprises, the government is defeated, whereas in other situations, like the merger of about 20 years ago, with when long-term capital was um, involved in these types of situations, the um, Department of Justice challenged the merger of Staples, and there was another firm at the time. And contrary to popular belief, the DoJ did win, which created a surprise, which is one of the contributing factors to the collapse in long-term capital. That being said, those are rare, extraordinary circumstances, but these things do and can happen.
Yeah, I mean, like, David brings a very good point. Um, if one company provides a service that literally everyone is using, and then another company comes in and supplies the same service, but still company A has by far the vast majority, is that a monopoly? Because the market kind of decided who they chose, right? Now, there's other things here that, in terms of paying for being on certain platforms and devices, okay, there's that as well. But at the heart of it, like, I mean, you know, um, supposing Edge or Yahoo went to those same devices that kill. Well, can we buy space on yours, on those same devices? Is it still going to be a monopoly? It's an interesting question, right? And but anyways, at the end of the day, what David is saying is I absolutely agree with him, and we just need to wait and see. I personally don't think this is a reason to either buy or sell this, because as David said, this will take years to hash out. Harminder asked a question: with Google market share under pressure with ChatGPT and other AI tools, is it possible this lawsuit just goes away in time? I can assure you, in time, this lawsuit will go away. But what the result of it is, I have no idea, right? But it's just going to it is just going to be something we need to monitor continually.
Just to pick up on Harminder's point, a number of years ago, they broke up the bells in the States and created all of these baby bells. It turned out that it wasn't necessary. Most of these companies and the telcos discovered that there was so much competition from other forms of what their business model was, which is uh, creating communications, that in retrospect, it wasn't necessary to split up the telcos. And ironically, some of them have tried to put themselves back together so that they have the power to compete. So all of these antitrust concerns, monopoly concerns, they may be valid at a point in time, but it doesn't necessarily mean that they will continue to be valid. And so, Harminder, your point is correct. Um, if the evolution of technology changes, can it be said that they will be able to maintain um, a perceived monopolistic position in the marketplace? And based on my experience, no. The one interesting thing is that technology is not static. And one of the interesting things is if you take a look at the Dow 30, which was created, I think, about 120 years ago. Don't hold me to it. I don't believe there may only be one name of those top companies that existed 120 years ago that are still in the Dow. So technology and everything changes. What is powerful and relevant at a point in time does not necessarily guarantee that you will always be there through time.
So the other thing I think Harmon might be referring to, and I was just rereading his question a few times, is as of late, I've been doing my Google searches have turned into more direct chat GPT questions. So rather than a search, I'm asking a specific question because I'm able to more easily in chat GPT than do, because if I search in Google, um, you know, it is just a search. I'm guessing at keywords, but I can ask a very direct question in ChatGPT or another AI tool, and I can get a much more direct answer. If that is how you are using, the Google search engine, the way my businesses are and my searches go, I'm more and more gravitating towards direct questions. So if that's what you meant, Harminder, I could see that happening as well, because then what is the importance of a search engine if everyone is using very directed questions at chat with ChatGPT or another AI tool? So let us know though. That's an interesting one. But yeah, David, do you see people veering away from general searches and more like directed questions?
Oh, I do. I do all the time because right now, every time I do a Google search, I get so much garbage. It's extraordinary. And I've found that if I use Chat GPT and ask some questions, I actually um, get better answers, and it's not filled with the same garbage or the advertising and all the other stuff. So yeah, no, this is interesting. And one other thing is, um, when I do a Google search, I'm not paying anything. So who is it that's actually paying? And just because I have to use Google to do a search because they're the primary search engine, I'm not paying anything. So again, we got to define who's who's actually suffering, and that's going to make it even more complicated because if I'm not paying and I'm using the service, how can you argue that I'm suffering? And I guarantee you that will be an argument that will come up in the discussions.
Yeah, I mean the model there is that, listen, like you have paid ads, like you search up like like for example, David, uh cars in Prince Edward County. He's looking for a car for sale, and maybe he'll see a Toyota ad or a Lexus ad or a Kia ad pop up, and those people are paying, right? But like, for Harminder's follow-up point there is, if you say, which is a better car for my, for my 18-year-old son to commute to and from McMaster on a daily basis based on safety and fuel economy, and you hit enter and you go into ChatGPT, maybe it'll give you a short list of cars, right? Now, are you going to have, I'm speculating entirely here, are you going to have paid ads inside the ChatGPT engine, inside the AI engine? Maybe that day will come. Who knows, right? If we see more users using ChatGPT, maybe that day will come. So yeah, Hummer is saying, yeah, I agree, Jens. I use ChatGPT a lot more these days for direct answers versus a bunch of links. Absolutely. Moral for me is that no need for governments to intervene on monopolies. Free market takes care of itself, particularly in technology. Yeah, as the saying goes, let the market decide. Except when it comes to government, then we let the government decide. Okay, let's continue on here, guys. But this was an interesting discussion because I think you're going to see more and more of this because more and more, like across like almost every industry, AI is being used more and more and more. And I think we're going to see a shift in preferences here as well. Okay, so onto our fund. This is as of September 20th, guys, 5 days ago. We are about 93% invested. The rest is in cash. You can see that we are around the desired exposure for almost everything here, with the exception of a couple things. One is Tesla, and yeah, that's pretty much about it, which is the furthest away from our desired position, and that's basically a function of us not getting into positions at the right prices at the moment. And this is a snapshot as of September 20th. You can see we are heavier into the likes of Microsoft and Nvidia. An interesting, in my opinion, an interesting pair that makes two companies. One is the new and exciting AI company, and the other one is the bellwether of the Nasdaq, which is also into new and exciting AI technology, but has a certain amount of I guess the word is historical long-standing, I guess, but still in a technology space with Microsoft. And yeah, so we're quite pleased with the allocation here. We do have a little bit of Bitcoin through the ETF IBIT. Airbnb is becoming a very, very small amount. We may or may not divest of that entirely fairly soon. Eli Lilly kind of brings us a little bit of diversification away from an AI product into a dynamic industry within healthcare as well. In pharmaceuticals, so many new drugs are coming out, and we are monitoring that progress as well. So all in all, listen, I think we are quite well positioned for what this fund is supposed to do. This fund is supposed to, it's not supposed to be getting walks onto first or hitting singles. This fund is supposed to be hitting doubles, triples, and home runs, in a responsible manner, of course. We're not using any leverage. We are not investing in companies that we do not have significant amount of research supporting, and we are obviously ensuring that every trade is defensible to our future selves. So that in a nutshell is our portfolio here, guys. Any questions, just let me know. And again, current number of written puts winning at 8. This is a soft time of year. This is seasonality driven, guys. We had a bit of a rough September, not necessarily AUM wise or performance wise, but we did have some choppiness in the market in early September, literally as the calendar turned over from August to September as well. So we did lay off a little bit there to see where the dust settles. We do have a significant more covered calls, because we know this is the time to write covered calls. If the market is struggling to hit new higher highs and has been a little choppy, this is the time to write covered calls, in our opinion, right? And we have about 12 long positions, including IBIT. And you can see that we're not quite fully exposed here, which is good, and it is done on purpose because we want to have dry powder there to get into positions if there is a larger sell-off. Going forward into October, we're going to still be a little cautious, but we're going to start, outlaying some capital to reduce that cash balance and get us a little bit more fully invested through options and direct long exposure. Okay, let's continue on here, guys. So again, just general items. You guys know this. These funds are RSP eligible, registered account eligible. Registered account basically means that the funds are registered with the CRA. So either RRSPs, TFSAs, LIRAs, etc., RIFs as well. Yes. So we have the fund subcode is if you're buying this or through your RBCDS advisor, and it is a growth play here. Okay. Let's continue on here. What to look out for? So October, volatile month. Absolutely. September and October, no one really looks forward to these months in when you talk about investors and money managers. It's almost like I'm just going to turn away and let's see what happens type of month, because there's a lot of choppiness, and with more choppiness, you get away from what really the true value of certain positions are. So they are, absolutely, seasonal kind of things that happening here. During October, SP has gained 1%. So we'll keep that in mind when writing options on this portfolio and when going into longs. And Nasdaq has gained around 9% over the last 50 years. So those are pretty good stats, guys. But I will, every time I speak about seasonality, I will warn you, and David can warn you even more. The stock market today in 2024 is not even remotely close to the stock market that was 50 years ago. I was negative 12 at the time, so I really don't know, but I heard it was completely different. But even like but even like from 2020 versus 2000 versus 1998, significant difference. So and you go minus 50 years, I'm sure there's like a world of difference. So I would take these kind of stats with a little bit of grain of salt, because you're talking about two different types of markets 50 years ago versus now. David, anything more to say about that type of data?
No, things are similar, but always changing. I suspect the best metaphor is a river. The river, you kind of know where it is, but the water that's moving through it is always different. So there is a relationship between what was and what is now, which will obviously be different depending on your perspective and how you measure things.
As the saying goes, I think eventually all things merge into one, and a river runs through it.
Well,
There was a
the
movie that
laws
had
of
that.
entropy say everything will converge at a single point way down the line.
Yeah, that's billions of years from now, so we don't need to worry about that.
Yeah.
It's beyond our time horizon. So yes, we are obviously, this month, if someone asks me, hey, what's the most important thing that happened this month? It is the FOMC announcement. I think that's by far the largest macroeconomic event, and what was said at that meeting, I think, is by far the most important thing that's happened this month. I continue to think that, and I continue to think that it is going to be, people will be mindful of earnings. Absolutely. They'll be mindful of the other kind of big three macroeconomic factors that are, jobs, inflation. But I think that at the center of this is going to be interest rate cuts, right? So, and we'll continue to monitor those on both sides of the border. Both sides of the border are now kind of, to use David's word, they are kind of converging. They are both looking for at least a couple more cuts before the end of this calendar year, right? So I mean, like that, and I think guys, you can go into Fed Watch and you can see what's happening in the United States, and in Canada, it's a little bit more transparent. And generally speaking, not much. There's less people that care about what happens in Canada, to tell you the truth. But that being said, I would be more and more focused on what people are saying, what the federal governors are saying, and what Jerome Powell is saying versus what he is actually cutting by. I think words are going to become more important than the numerical delta between meetings. That's my opinion. And of course, lastly, yes, we have a little election on the horizon, maybe two, but the one we care about right now is the one in the United States, because that's written in stone for sure. And again, I think if you look at the data, like a bunch of data, it doesn't really matter, guys, right? But it does right now, right? In terms of short-term blips, it does right now. And that is going to, in my opinion, potentially weigh on the market. And yeah, I mean, when it was Trump versus good Mr. Biden, it was Trump all day long, and now it's Trump versus Ms. Harris, and now it's who knows what. So anyways, we'll see what happens. I believe November 5th, right?
Yes.
Yes, November 5th. That's another
But
kind of point of
but
uncertainty for coal.
let's put a little footnote there. If it's close, and I suspect it will be, I don't think when we get up on the morning of the 6th that we'll know who's the new president-elect. I suspect we are going to have an interminable delay, and I suspect that we'll have to wait probably 2 to 4 weeks before we actually know definitively. Now, I could be wrong. Maybe from my perspective, people will wake up in the swing states and realize, wow, let's just make this unequivocally one-sided in favor of Harris. That's my bias. But I suspect that that's not going to be the case, and I think there will be legal challenges with the voting results on a state by state, which means that there will be delays. That seems to be the way ever since the hanging Chad issue between Bush and Al Gore way back a few years. Well, that's like 20 years ago.
Yeah. So I think David's right. It's going to be it won't be decided on the night of the 5th. It will be decided maybe on the night of the 5th of December, but not the night of the 5th of November. But we'll see. We'll see. I mean, but again, I mean, I don't know whether to take U.S. Politics as politics or entertainment these days. But that can be an argument for another day. But okay, guys, let's continue on here. That's what we're kind of looking out for. Again, any contact information. Omar has or will be reaching out to any and all of you, and you are more than welcome to see to contact me, Omar, or David with respect to the Theta Alpha Fund. And I'd just like to thank you all for your support, and we thank you for doing business with us, and we will see you at the next call. Thank you so much. David, any closing comments?
No, this is we're getting into a quiet time. I know there's lots of interesting things out there, but sometimes it's nice not to have a lot of drama in the markets, and it's good to the passage of time will ameliorate some of the anxiety, and we just have to be patient. We need to adjust to interest rates. We need to adjust to political expectations. And people are, let's face it, in about another 8 weeks, are going to slow down for the holiday season. And 10 weeks, they'll start slowing down. Yeah, it's just, we just need to be patient and observe and know that we do not know what will happen. We can only speculate and create a sense of what we expect to happen. And then information is used to change and feedback on our expectations. But no, I'm comfortable. got to realize that at the end of 2021, the central banks were telling everyone that they were going to crank up interest rates. They pretty well sent an email to everyone in the world and said, we are raising interest rates. It was painful. Now we have been through the pain. We've adjusted to it. We've adjusted our expectations. We've adjusted our spending patterns. We've adjusted how we do things. So now we know interest rates are coming down. It's going to take time to work through, but I think this is a much better place to be than where we were at the end of 2021.
Thank you, guys. Thank you, David. All right, guys. Thank you so much for your time. This will be posted to YouTube over the next day or two. Again, thanks for all of your support. If you have any questions, you let us know. And yes, we wish you a lovely Wednesday afternoon. Have a good day. Bye-bye.
Thank you.